Good morning, everybody. Today we are doing a financial accounting presentation for week 12. And I am Ambrose. And my teammates are Alex, Thomas, and Jessica. Here is our presentation overview. Jessica Ho will deliver question 36.9a. For me, I will talk about 36.11a. And for Alex and Thomas, they will talk about question 1, which is the additional tutorial question.
Hi, I'm Hokayu Jessica. Today I'm going to talk about Q36.9a, which is income statement and balance sheet. 36.9a, the following is the trial balance of 2D as on 31st December 2020. And the question given us that the total debit is 1,636,300 and the total credit also. And given the following information, the inventory at 31st December 2020 is 102,400 and the motor expenses only is 280 and the ordinary dividend proposed of 5% and transfer 7,500 to general reserve and provide for depreciation, motor vehicles and machinery 20% on cost, permits 5% on cost. And we are going to drop an income statement for the year ending 31st December 2020 and a balance sheet as that day. Okay, then let's see our answer. And this is the income statement for the year ending 31st December 2020 of 2D. And first we can see the sales is 975,600 and next is less cost of goods sold. The opening inventory is 8,100,300 and the purchase is 623,800. Okay, then next step we need to draw is the less closing inventory, which is in a debit side is 102,400 and the credit side is 602,700 and the gross profit is 372,900. Okay, then next step is the wage is 241,500 and then we need to drop is motor expenses, which is 4,300 plus 280 is the total is 4,580. And next step is machinery repairs, which is 3,600. And then the next step is sundry expenses, which is 2,900. And then next step is depreciation permits, which is 13,250. And then it's machinery, is 21,820. And then motor vehicles, 6,940 and 42,010. Director remuneration is 82,600 and 377,190. And the net loss is 4,290. Talk about the balance sheet as at 31st December 2020. First, we need to write non-current assets and 3 column, which is cost, depreciation, and net. Okay, inside the non-current assets is permits, machinery, and motor vehicle. In the cost column, the final is 408,800, and in the depreciation, in the middle one, is 161,610, and the last one is the net column is 247,190. Okay then. Next one, the next step is current assets, which is include the inventory, accounts receivable, and bank. There is no any amount in the cost column, and in the depreciation is 17,900, and the next one, the final is 537,090. The next step is current liability, and we don't have non-current liabilities in the balance sheets this time. And inside the current liability is accounts payable and motor expenses only. And then in the depreciation column is 280 as final, and the total assets minus current liability is 461,910. Okay, the final step is equity, which is called up share capital and general reserve, which is 60,000 plus 7,500, and retained profits is minus 4,290 plus 31,200 equal to 7,500, and no any amount in cost column, and in the depreciation is 90,410, and the final, the net column is 461 and 910.
Hi, my name is Ambrose, and today I will be talking about question 36.11a. So, let us begin. Here is question 36.11a. The following information concerns Hermes plc in relation to its year ended in 31st of July 2020. Now, for students who are interested in doing this question, I will give you a few seconds to take the photo of this trial balance if you want to follow what I'm about to say in the next few minutes, because this trial balance will be very useful, and make sure that you take the photo very carefully for the numbers recorded. And other than the trial balance, the question also have some additional information. In fact, there is 9 points of the information, as you can see. And again, for people who want to calculate with me, you can take the photo, and I will give you a few seconds just to take the photo. So while you're taking the photo, I will explain what we need to do in this question. So we need to, first of all, draw an income statement for the year end 31st July 2020, and a balance sheet as at that date, both in an internal use format, not for the publication. If everybody is ready, then let's move on. So now, after we get settled, let's move on to the important notes that I think for this question. So from the additional information that we looked at before, from the point 1, you will see that the closing inventory is $53,661, and this is found from additional information number 1. This information is useful in the income statement and balance sheets, so that's why I put IS plus BS on the side. The second point is the depreciation. From the additional information point 2 from the previous slide, you can see that there is 3 fixed assets. There is premises, machinery, and fans. So from the second additional information and from the trial balance, we can find out three of their depreciations. And for premise and machinery, this depreciation is very straightforward because they both use straight line method. But for vans, it is using the reduced balance method. For this method, we need to first of all cost minus the accumulated depreciation, then we will times 30%. And three of these depreciation, we will use them in income statement only. And the third point, from the additional information, you can see the prepaid rent. So for the rent, it says that there is a payment of $8,100, which represent 12 months rent to 30th of November 2020. For this point, you need to take a very close look at the period. As I mentioned in point 9, the period for this income statement and balance sheet is from 1st of August 2019 to 31st of July 2020. This is different from the income statement and balance sheets that we normally do, which is from 1st January to 31st of December. So this is important because, as you can see in this point, the $8,100, it covers 12 months rent to 30th of November. But this period, we end at July, which means 11 minus 7, which means there is 4 months of rent not inside this period. And therefore, these 4 months of rent, we treat them as prepaid expense. Okay? So they are prepaid rent, so therefore $8,100 divided by 12 months times 4 months, so we get $2,700, and this will be put it in the balance sheets. Okay, and then for point 4, the accrued utilities, as you can see, very straightforward, $6,757, it will put in balance sheets. And then for allowance for double debts, as you can see in additional information, number 5, it is set at 5% of the accounts receivable. So you can find this information from the trial balance. So just use $105,000 times 5%, and you get the allowance for double debts for this year. And for the increase or decrease of AFDD, from point 6 you can see, for this year, the AFDD is $5,280 as I just calculate. But for last year, you can see it's $4,237, which means in this year, we have an increase in the AFDD, and therefore we need to minus, okay, $5,280 minus $4,237. And this is the increase in AFDD, and we need to put this in income statement. Number 7, accrued audit fee. This audit fee, as it mentioned, has been agreed at $18,000, and this needs to be provided for. However, this audit fee was not shown on the trial balance, which means it is accrued. So we need to put this in the balance sheet as well. Number 8, accrued loan note interest. From this, we can see the additional information, as it said in point 6, I believe, or you can say that as VII. The interest on the loan notes is paid in 2 installments each year. So there is 2 installments. And for the trial balance from the question, there is already 1 installment, which is, I believe, is $6,135. And there is also a second installment to be accrued, which means the second installment will be same, $6,125, and this will be accrued. Therefore, we will have a accrued loan note interest. This is for balance sheets. And number 9, as I mentioned before, very important, the period is not, again, it's not from 1st January to 31st December, okay? I think this is important because to be honest, I make mistake when I'm calculating this because I didn't see that the period is from August to July. is different. Okay, and point number 10, as you can see, we need to calculate retained profits at the year end because they wasn't given to us, and but we can find this figure from the trial balance and from the additional information and from the income statement. So to calculate this is equals to retained profits at 1st of August 2019, which is 428,867, plus profit after tax, which we can find this figure from income statement, okay, and minus the amount transferred to the general reserve, which is $8,000. You can find this in additional information. Then minus dividends paid, which is 51440. And then this figure, we will put this in balance sheets, okay? And just in case there is some mistake or confusion, I'm sorry about that, but you can still take a photo and for your reference. Thank you. So now let's go through the solutions together. This is the income statement for Hermes for the year end 31st of July 2020. The income statement here, overall, the letters in black, okay, the words in black, they are some of the fundamental things, so I will not focus on them. Instead, I will focus on the red arrows and the blue words and the red words. As you can see in this income statement, first of all, the closing inventory, as I just mentioned, you can find that in additional information point 1 and the 53661. We need to minus this closing inventory in order to get the total cost of goods sold, okay? And after that, sales minus cost of goods sold equals to the gross profit, which is 618,399, okay? This is the gross profit. After we have the gross profit, then we just have to add the revenue, and it will be equals to 626,357. The expense, okay, move on to the expense for utilities. Originally from the trial balance is 20479, but since there is a additional 6757, which is the charges incurred but no invoice have yet been received, so therefore we need to add 6,757. And now for rent, originally from the trial balance, it is 19,757, right? But again, because there is 4 months, which is not in the period, as I mentioned before, if you have taken the photo, you can take a look back. In the point, I have written the rent. It is 4 months, not yet in the period. So therefore, we need to minus the 4 months of rent. Okay, and then move on to allowance for double debts. This allowance for double debts, it is equals to, if you look back at the photo, it is $5,280 minus $4,237, which we will get 1043, right? As you can see here. And next, for depreciation, again, I have mentioned them. So as you can see, the calculation and the numbers here. So I don't need that much explanation if you have taken the photo, I guess. And then after that, after we add the revenue and minus the expense, we will get the operating profit, which is 162,167. After that, we will have to minus the loan note interest. Now this loan note interest, sorry, when you find this, you can take a look at the trial balance in the question. There is a item called 7% loan note 2025 to 2027, which is $175,000. For this interest, basically we just need to use $175,000 times 7%. and we will get $12,250, okay? And then we will get the profit before tax, and it is 149,917. Then minus the corporation tax expense, which is 33,000. We can directly copy this from the top balance. Then finally we arrive at the end. Profit for the year 116,917. Just a quick reminder, the profit for the year is very useful. Again, remember what we need for this figure. If you have taken the photo, then you will know what I'm saying. Because in the important notes, in point 10, I have said that we need to calculate the retained profits at the year end, and to calculate that we need the profit after tax, and finally we know the profit after tax, which is profit for the year, okay, 116,917, and so we can finally have the retained profit figures. Okay, so now let's move on to balance sheets. Again, here's the balance sheet. I will only explain the key points, and for the other points in black, they should be very straightforward because you can copy them directly from the question. So first of all, of course, we always start with non-current assets, right? There was 3 non-current assets for this question, and again, first of all, we will start with their causes, which is in black color. Then we need to minus the accumulated depreciation. For the accumulated depreciation, we have 2 parts. We have the AD from last year and from the last period all add together. In blue color, you can see, for example, for premises 171,236, okay, the accumulated depreciation for premise is 171,236. Then you might ask, what is the 13172 in red means? What is that figure? Now this figure is actually the depreciation for this year, which is very easily to forget, okay? So therefore, make sure that we need to add this year's depreciation into the accumulated depreciation in order to get this year's net book value. So as you can see, the net book value for premises is at the right, which is 474,192, and so does machineries and fans. They are both the same logic. Okay, and then move on to current assets. Current assets, again, the first inventory. This inventory is the same number as the closing inventory, 53661. Nothing special. For the allowance for doubtful debts, again, if you have taken the photo, then you know what I'm talking about. For this year's AFDD, $5,280. So we need to minus this figure in order to get this year's accounts receivable. And then for next point, prepaid expense. Again, this prepaid expense, if you know what it means, it is actually referring to the prepaid rent. Okay. Again, remember what I said before, the 4 months rent, okay, not in this period, and therefore this is 2,700, okay, which after that we can get the total assets, which is around 1 million something. After that, move on to the total equity. For general reserve, because in the additional information they said the directors want to transfer 8,000 to the general reserve. That means in general reserve we need to add 8,000. Therefore, it arrives to 42,100. Okay. Next, move on to retained profits. Like I said, okay, this, as you can see in the formula, what I've written, 116,917. So this figure, okay, this figure in red. Can you follow me? Retained profits 116,917 in red color. This number is actually the profit for the year. Okay, if you have taken the photo for the answer of income statement from last page, you can see it is at the very bottom, 116,917. So after this, we use the formula. Okay, the formula I have already written down in important notes 0.10 if you have taken the photo again. Then you can get this year's beginner profits, which is 486,344. Then we will get the total equity. For non-current liabilities, is very basic, direct copy. For current liabilities, we have accrued expenses. So accrued expenses, you can see three numbers. The first number, it is the accrued loan note interest. Okay. For the second number, 6757, it is the accrued utilities charges. And for the third figure, it is the accrued audit fee. For some people, you can write them separately, but for me, I write them all together, but make sure you remember what they belong to, and that is okay. And for the other figures, you can find them in trial balance. So after that, we will finally arrive at total liabilities and equity. So to make sure to ensure that we didn't calculate any mistake, as long as the total assets equals to total liabilities and equity, then basically your solutions should be correct. So this is it. Here is the answer for question 36.11a. Make sure you take the photo if you are interested in the answers, and I will move on to another presenter for another question. Thank you.
Hello, my name is Holding Alex. Today I will talk about week 12 additional question. Here is the data already shown in the week 12 additional question. The following additional information relating to GPA limits. Stock at 31 March 2017 was valued at $39,200. Second, machinery costing $43,600, which $28,218 depreciation had been provided, was sold for $21,516 during the year. 3. Depreciation on motor violence is 10% and machinery is 5%. 4. There are accrued weighs amounts of $5,618 and prepaid insurance of $9,800. The accrued debenture interest is not yet paid. The exterminate tax expenses is $6,514. The directors has designed to increase the general recipients up to $19,000 in total. Required. Prepare for GPA limits the income statement, the statement of change in equity, and the balance sheet for the year ended 31 March 2017. For the GPA limits income statement, we need to use sales to minus the total cost of sales. For the sales, the number is $613,216 to minus the total cost of sales, that is $215,023. Then we got the gross profit, that $372,237. And we need to add the profit from the disposal of machinery. The disposal of machinery profit is $6,248. Now our profit is $378,477. Then we need to less the expenditure. For the expenditure, salary, general expenses, and director remuneration are already different. So we need to focus on the wing and raise the debenture interest, the insurance, the depreciation expenses for motor violence and machinery. For the wing and race, we need to use 100,000 and $8,007 plus $5,618. For the debenture interest, we need to use 84,000 times 8%. For the insurance, we need to use $25,720 to minus $9,800. For the depreciation expenses for motor violence, we need to use 175,000 times 10%. For the machinery, we need to use 196,000 minus $43,016, then times 5%. So after we calculate the total expenditure, we will find that the number is $342,009,059. Then we need to use the profit minus the total expenditure. Then that is $35,518 before taxation. Then we need to net the tax, that is $6,514. So the profit at the year is $28,978. For the GPA Lehman statement of change in equity for the years, we need to use the old retained profit brought down to add the profit for the years. That is $175,623 at $28,978. So the profit is $174,601. Then that's the interment ordinary defender paid, and then minus the interment performances defender paid, and minus the transfer to general reserve. So that is $174,601 minus $9,400 minus $500 minus $300. So the new retained profit brought down is $164,401. For GBA limits, the balance sheets, we need to calculate the non-current assets first. There are two items. They are motor violence and machinery. For the motor violence, we need to net the accumulated depreciation, which is $109,500 plus $17,500. Then the motor violence assets are valued by $48,000. For the machinery, because we sold out $43,600 machinery, so we need to minus that first. And that's the accumulated depreciation. For the depreciation, that is $127,800 minus $28,218, which is we have been proved, and plus the $7,620. So the machinery is $45,216. So the total non-current assets is $93,216. For the current assets, the item include stocks, debtors, account receivable, prepaid insurance, cash advance. The total current assets is $882,000 and $862. So the total assets is $976,122. Move on is the liabilities and owners' equities. We need to calculate the current liabilities first. The liabilities items include creditors, corporation tax, accrued waste, and debenture interest. To calculate the debenture interest, that is by $84,000 times 8% minus $2,800. So the total current liabilities is $107,000 and $2,021. Then move on is the non-current assets. Only one item is 8% debentures, which is $84,000. So the total liabilities is $191,721. Move on is the equities. There are 4 items. First is the ordinary shares of $5 each and preferences shares of $1 each and general reserve and the new retained profit. The total equities is $784,000 and $4,001. So the total liabilities and owners' equities is $976,122, which is same of the total assets.